Tell me. What? What do you want? What? What? What do you want? It's Wednesday morning. It's a good day. It's hump day. Come here. What are you doing? What? Tell me. What do you want? Hey, what? 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 Are you my buddy? Are you my good boy? Come in here. Let's just show everybody that big head. Massive dog. All right. All right. Let's get in the Alpha Trading Discord. Bam. 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 Okay, buddy. What do you want? Do you want outside? Do you want to go chase squirrels or what? What's out there? Is there coyotes? Or are they squirrels or rabbits? Even better. You like rabbits? Let me let this maniac out. Go. Behave yourself. Jesus, he takes off right towards the neighbor's property. Oh, fucking jackass. Okay. Ah, what's up? What's up, traders? That's what I'm talking about. Good stuff, man. Good freaking stuff. Yeah, crazy game they're playing P-Funk with the money, huh?
Yeah, it's a crazy read, man.
Yeah, dude.
Dude, it's like $1 trillion every month they're going up. I don't know. I mean, it's
ridiculous. It is ridiculous. The whole thing is, you know what? I wonder what the percentage of people that are just blah blah blah, they just don't have a clue. They're just motoring along, man. Not interested. It's not like I'm super interested, but God, it's a joke.
Can I ask, because like you guys live there, like what are the kind of things that news would affect in your daily life? You know what I mean? Like, does the price of biscuits go up? Does the price of biscuits go down?
The weather.
Does the house go up? Does the house go down?
The weather's the only news that affects me.
Yeah, I was just going to say, there's really not much more than that, man.
Yeah. All the other news?
The news is, the news is skewed two different ways, man.
Oh, it's such an arm of tactical programming. Like, have you seen the clips people put together of just newscasts across the nation, literally saying the same shit? It is insane, dude. They're all given a script. It's crazy, man. It is absolutely insane. What? Is this guy already out here barking? Hey, stop! Wonder if the neighbors like the dog barking more or me yelling at the dog. What do you think?
I got my cats are outside too, man. They just run around outside. Now they're bringing home crickets to show me.
Oh, here, look what I found, Dad.
Yeah, exactly.
Yeah, mine used to bring home rabbit heads. They never a whole carcass. I'd either get the head or the body deheaded. One or the other, never the whole thing. It's like, well, thank you. Thank you very much.
Yeah. Can I ask just this part?
Yes, sir.
It says in the paragraph that you posted, this demand creates an arbitrage opportunity. With excess forward premium comes hedging in the dollar spot market, which increases the value of the dollar. Right.
So they're playing a game with those overnight repo rates. They play a game to capture the spread. So because things have been going up, it widens out that spread. It's the cost of banks having to keep their net cap at certain things. It's above my pay grade and the understanding of it, but all I know is that they're having to borrow like $2 trillion every night.
Oh,
so just keep on getting all their mortgages are priced. It's a little different than like the 08 crisis. All their mortgages are priced to perfection right now. You know what I mean? Because they've loaned out so much money that any movement in the value of the real estate, I guess, this is what I was told, that it affects their net cap.
So would you, as a bank, let's say you expected to get whatever, $25,000 a day, thus you didn't have to pay those overnight fees. Sometimes you maybe get 35, sometimes you get 20. So it can balance out at the end of the year. But now maybe the max they can get is 5, 10 every day. Then they have to balance out. So that could maybe mean that people are a little bit cash strapped and can't fulfill, you know what I mean? Like if the payment for the house is $1,000 a month, they can only do 700 or 300, but they're still committing.
Right. So and the problem they're facing right now with the real estate market here is that everybody's in these 3% mortgages and they don't want to go to a 7% mortgages, so nobody's putting anything up for sale. So now you have a lack of for sale and inventory mixed with, higher prices. It's kind of like a quandary, I guess, is what I'm being told.
Okay.
You know what I mean?
Okay. Yeah, I can sort of picture something like that happening here when I was a little bit more so looking at property. Yeah, there was like a scarce amount of properties valued for quite high.
Exactly. Especially where I live. I mean, like, let's put it like this. I've been in this town 7 or 8 years, and I could have bought a house here for, I don't know, say like 160,000. All those same houses are like 400 plus now.
Yeah, man.
In 8 years. That's insane. Yeah, it's insane. It's unsustainable. You know what I mean? So right now everything is priced like, oh, if you want to buy a house, well, now they'll just throw it up for sale for 500 grand.
Have you seen? Boy, I saw some numbers thrown around, some percentages they were throwing around of just things that are more than like the average income and all that compared to the Great Depression to today. Today is so much worse.
Oh, it's way worse.
Way worse.
Well, look at the UAW right now. This whole UAW. Do you know what they're asking for? They're asking for a 40% raise. Okay, over the next 5 years. Ford, GM, and Chrysler cannot afford to do that because then that would mean the average auto worker would be making 300 grand a year.
Yeah.
Well, really, and yet in their minds they feel like they should be making 300 grand a year only because inflation has gone up so much.
Yeah.
And they offered them 20% raise, which is still huge. So I mean, an auto worker can make 90 to 140 grand a year. It's really good for basically a high school dropout.
Oh shit. Okay.
Right, and they get full medical, full everything. And you know what I mean?
Yeah.
Got a new.
That's the world that anybody would love to have that job. You know what I mean? Because it's a guaranteed. But like in the old days, they used to have pensions and the whole nine. The pensions part is another part of their quandary too, because they want them to just do 401ks.
Yeah.
And now that the market has gone straight up for 14 years, I think basically
the problem is going to cash in now.
Yeah.
Yeah.
I don't know. I do like one thing about this one guy who's running for president, and I do agree with what he's saying, is that I don't know what his name is, Johnson or something like that. He wants to charge a 2-cent tax on every single dollar for 4 years. If we do that, we can pay the debt off. It's actually a pretty good idea.
Except they're not going to take that and use it for that.
Well, we know that's the problem. You and I both know that, and all of us in here know that. But if you did that,
look, it makes sense, right? It makes sense. Like if you go electronic, it's very hard. Like when you start integrating, let's say Solana blockchain, and it's freaking stable coin or USDT or whatever it is. It's like every time that whatever asset gets converted into a real USD, or the government USD, that's for the outside world, not for the inside world, right? Every time it's converted into one of those, then there's a 2% that they take. So what you're doing is every $1 that you're buying offshore, you're only getting 98 cents, and they take that. And that makes sense.
It's only a 4-year deal, you know what I mean? I don't think it's a big deal for anybody to do that for 4 years.
But then what has to happen is, let's say like just the general logistics of Thailand. I'm sure Bilberg would be able to count the amount of transaction that maybe has to happen to order pizza dough. So money in, that's 2 cents. Then money out, That's 2 cents to the dough supplier. Dough supplier has to pay someone. That's 2 cents.
Wow.
So the shop is getting charged extra 6 cents to check. So
yeah. Well, I mean, if
so
it's just
it's like that.
Well, that's that funny math, man.
Yeah. So that's sort of it's a good idea, but like if it takes too many transactions to get from source to final product, then the product's going to reflect the price.
Right. So by the time it gets to the public, it would have 2, 4, 6, 8, 10, 12 cents on it. You know what I mean? 2%.
Yeah, you know pretty much. And that's per dollar, right? So then you go $10, that's extra $1.20, extra $1, 12 cents for every product you currently see at $10.
Yeah.
Well, you would have to have some kind of limitation on it in order for it to work, or maybe if it was just retail. I don't know. I just think that some form of that, something's going to have to happen because you can't keep going up $1 trillion every month.
Yeah.
Dude, how I look at these things, the Andrew Wang guy, like this was like my like wow, this is actually happened in America. The Andrew Wang guy said, I want to give everyone $1,000. Right? This is before all the PPP and stuff and whatever the government could do in those times and stuff. And that's exactly what happened. Right? So when you hear one of these guys say something that's like, this actually does make sense, but it's a little bit far-fetched. There could be the right environment for it to work. You know?
Well, I said some sort of form of it, obviously, but like Bilbo says, would it get to the right place? Probably not.
Probably not. Yeah. No, these politicians want to get everybody money. It's like, okay, where's the money coming from? It's a joke, man.
If the Democrats had it their way, we'd just be, we'd more or less be a socialist country.
Yeah.
We just, have health care and free college and free everything. And then at that point, then all you do is have institutional welfare.
Yeah.
Or, which you already see. I'm sure everybody in here knows generational welfare. I see it every day in Detroit. I saw it in California. Saw it in Miami.
It's brutal.
You're bred to have welfare.
Yeah, man. 100%. And let's just say the immigration going on in this country right now, the American dream is not the American dream of old. The American dream today is to come over here, get on government assistance and not work, sit on your ass and be a plague. Exactly. It's a shame. It's a shame.
It's a tragedy.
It is a tragedy.
What's like the minimum you can claim? Like as a normal person and being as useless as possible. I don't know, maybe people in different circumstances, but like someone who's actually capable but is lazy and sits on his bum. How much can he get a month from the government?
Dude, well here's a good example of some. We had a young girl come in, get a job. I mean, there wasn't any sustainability. She couldn't. Her accent was too thick. She was from the Congo region. I'm pretty sure went to, I think her exit point out of Africa was Zambia, to be honest. And so her 5 sisters, mother and father, came to the United States. Well, is what I come to find out, she had 6 brothers too. And I'm like, well, where's your brothers? They all got taken. When they came of age. They got kidnapped, taken to the mines, whatever. They have no clue. The government put this entire family of 8 people, full assistance, name it, they've got it, don't have to work, and gave them $90,000 straight into a bank account. They bought a brand new family car, all kinds of stuff. Dude, it's such beyond ridiculous what's going on in this country right now. They're literally trying to turn.
That's actually very crazy, dude. That is really insane. I thought it was way harder to get into America, dude.
It used to be.
Yeah, Tony, man, 100%, man.
I mean, Biden has a history. I mean, I think the state of New York is suing Biden right now because they can't handle whatever. They're facing bankruptcy or something because they can't handle all the migrants.
Yeah.
They have them in hotels. They got to give them health care. They got to give them food. I mean,
it was all good before they were all coming. They're the supposed sanctuary state, right? They're all we're a sanctuary state. But then when their states actually use this as sanctuary, they all fucking lose their minds.
Well, yeah.
We can't have this here. We can't have this here. You keep them down at the border towns. It's such a dude. The game that's being played right now is a riot. So crazy, man. So crazy indeed. All right, let's see here. Let's get into a little Dixie action. I'm seeing some good stuff here. And matter of time.
Good chat.
Matter of time for this pulls back to reverse wave trend here. Probably a 33 log MA first. Could this do this today? I mean, these Z-scores, this return oscillator, everything's setting up a bear divergence between price action and returns. And I see we got a funny little man in the chat. Man's chart looks like Pac-Man. Dude needs to go and play some video games. Nothing to see here. Hey, when you lose trades, we're on the other side. Goofy. This is real quant info here, man. This isn't traditional TA that you probably use, so you're not used to seeing things like this. Well, it's okay. It's okay. Stick around. You might learn something.
Got it!
You might learn something. You actually might learn something. Let's see what this 4 hour looks like. Yeah, the variance starting to have an outlier right now. Starting to have an outlier to the downside. Let me see here. And it's not setting up any local hidden or any bull div whatsoever. I mean, from back, I could switch this up on the 4 hour, but look, trying to break wave trend and Fisher right now. Look at this 4 hour. So you can see, right? Yesterday, right? You got this dump down, reverse wave trend, pulled back up, opened up a new candle, dumped down the reverse Fisher, pulled back up. Now we're right back down here again. Pressing on the reverse Fisher. If it breaks the reverse Fisher, this thing could go down to the 99 log return moving average. All right, I just got done blasting traditional TA. This is not traditional TA. These moving averages are built on the log returns, not price. All right, ridiculous. Get away from price-based indicators. They lag. We're not in the lagging indicators. We run with the big time algos. That's what we do here. You're not going to do that using that lagging information, unfortunately. So let's see. This 4 hour and $1. This is a tricky spot here. Real tricky spot. So if it breaks that Fisher, you could see the drop. 104.6, huh? So going to do it intraday. I don't know about that. It'd be the first support level on the weekly. Could easily happen. And we've got let me see here real quick. Which one is that? Is that still that monthly? That's that first monthly resistance. Yep. Red cross line there. First monthly volatility range resistance. Powerful little area. Might kick it back up from there. That's what I'm really looking for. Is it going to break back down below that? Because if it does, you will probably see this drop to that easily. And remember, that's the 4 hour 99 log MA. Yep, 104.625. And we got 104.689. So good stuff. 625. Right below the daily 95.4 Laplace distribution range to the downside. That's the white cross line there. Already breaking the first standard deviation normal distribution. But look where you're at. You're right at the bottom of the weekly range. Good spot, right? Is there bull algos waiting right here? Actually, yes, there are. Let's see if they can hold it up. Don't know. There's a lot of sell pressure on Dixie. A lot of whack shit going on. What's gold doing? Sideways, kind of. Yeah, big time. SPY's up, 0.36 pre-market. Here's something interesting I saw on SPY too. Look where this thing's at pre-market. Almost right at the bottom of the weekly range. Right at the bottom of the monthly range. Look what happened, right? Look what happened on Monday. You rise up right to the bottom of both those levels and just sell off. Yesterday, first standard deviation move. Did not close a 15-minute candle below that first standard deviation. Why? That's the bull algos just sitting there waiting. Now, what did I do? Right? This is literally right before the 4 hour candle close. Right? Ran it up, man. Ran it up. I bought a 443 call. It's probably about a 6x, I think, if I remember correctly. Nice quick move. Done for the day. Didn't get in any positions early. Waited.
Call, dude.
Yeah.
I paid 6 cents for it.
What'd you do?
I bought the same call, a 443 call.
Yeah. Yeah, it's a no-brainer.
It was beautiful.
Wasn't it? I was like cheerleading from the sidelines. Let's go, baby, run it.
It wasn't even until like 1 o'clock. You know what I mean?
Yeah. Yeah. Boom. Right here. let's see, what time was it? 2:30 is when that candle ran up on that 4 hour. It was going to run to the daily range, but you had the 4 hour first standard deviation. I front ran that. I took profit right in here somewhere, a little bit over 443. As soon as it got into money, right? I think, what did I get those? I got 5 of them for like, dude, weren't they like 7 cents or something?
Yeah,
I can't
they
remember.
went down. I think they went actually, and then at the end of the day, they went down to 2 cents, and then they
Oh, yeah.
rallied again.
Yep. Yeah, pretty crazy. Pretty crazy little run. It's fun.
The last 30 minutes with those things are crazy, man.
Yeah.
You can make a lot of money real fast on those.
Oh, big time. And it was trying to find
Yeah,
support here on this weekly support level. I mean, look at these 15-minute candles. Wick, 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 wick down to the 1SD, pulled back up. Didn't close the 15-minute candle below it, and then just ran one down to that first standard deviation, engage those algos, whap, right to the top. Gotta love it. This is tough here. This is tough for SPY. I'm telling you, man. This is interesting. So we're SPYs right below all this macro volatility. You got freaking Dixie. Just broke the 1SD move, and now it's bouncing off of the bottom of the weekly range. So be smart here. Would be looking for a Dixie bounce and SPY pullback. SPY is going to be probably going to play dirty here early. Going to hang up here. And here's another thing with SPY. Whoa, let's scale you correctly, friend. Get your butt up here. Oh, keep my scale.
Yeah. How I look at it, there's an untouched weekly on SPY at like 44523. All right. If my brain is in panic mode, this I look at it quite just. So whatever's happening, all right, if it doesn't hit 445.29, right, it can dump all the way back down to $1.
What weekly?
$1.
What weekly range are you talking about?
SPY. 5 minutes, let's just say, or whatever time frame you're on. But
no.
Weekly,
this week's?
GRE.
Are you talking about this week's weekly?
Yeah.
Hell, it got tested. What do you mean untested? It's right here. Here's the bottom side of the weekly right here. That's what it rejected off of.
Yeah, I tested it 2 days ago.
Yeah, it tested on Monday.
Yeah.
I sent screenshot.
I mean, immediately ran up. Almost sent a wick back to the bottom of the monthly right there. But yeah, the bottom of the weekly was right here under Monday's top side of the 68.3 and the center of the daily. I mean, the rejection here was a literal no-brainer. All this macro volatility, it goes up, tests it. It was a matter of time before that spilled over. I'm surprised it didn't really dump out. But
so it's going to open up at the bottom of the weekly now.
Yeah, it's right? Close. It's testing it again, literally. And here, let me turn on extended trading hours. Let's see. Did it get up there? No, right now. Slowly just been rising right to it.
Well, the futures, I cut the futures down this morning. I've been lining up. It's beautiful in the futures.
Let me see. Yeah, right. What are they all up? Yeah, but let's see. Futures are up 0.36.
It went from 4,500 to 4,508. I mean, realistically, you could, if I had been up earlier, the trade was at about 415 this morning at 44.94.
Wow. Yeah, this is pretty interesting here. So you're at the bottom. Is that the bottom of the weekly, top of the monthly right here?
Well, here's the thing with the problem with this, though. So you see how you had down, if you click the bottom right where it says be adjust,
yeah,
you get 2 different reads. And I don't know which one's the correct read. It changes. You know what I mean? It changes the daily, weekly, and monthly. And that's the problem I'm facing right now because I'm getting 2.
Well, that's the adjust for the contract changes, right?
Exactly. So are you better off not adjusting or are you better off adjusting? I don't know. What do you think?
So what's it adjusting it to? Which expiration?
I think it blends. I think it's like a blend of the old contract into the new contract.
It's a blend of the old.
So now if you type, now check this out. If you type in ESZ, Eddie Sam Zebra 2023, it will not give you the option to do that. So ESZ 2023.
2023.
Okay, it won't give you the option to do this. You'll see when you pull it up here.
Yeah, it doesn't have the adjust.
Yeah, it doesn't have the adjust button. So is this the true? You know what I mean? So ESZ 2023 is the same as ES1 exclamation point.
Right.
The M just means it's micros, but they're the same.
Gotcha.
You know what I mean?
Yep. I do.
So if I go off of this ESC 2023, then that's your true. I think that would be your true daily, weekly, and monthly.
That's a good
I don't
question.
know.
It's a good question.
Can I read a quick Google here?
Read it.
ADJ in TradingView refers to adjusted price data. You can toggle between adjusted, non-adjusted price data by clicking on the letters, blah, blah, blah. When the text is blue, you are viewing adjusted charts. When the text is black, it's off. You can also enable it on continuous in two ways by using BADJ. So that's for continuous. That doesn't make sense to me. I don't see that. Just for contract changes. Button at the bottom by checking adjust contract. So what I think it's doing is when it has earnings or whatever it is, and the company buys up, like Coca-Cola will say they'll buy up 10% of their shares, 10% of the profits going buying up every time they have to buy up. So it reflects that data. So if the candle closed all the way down, or whatever it is.
But a stock is a continuous stock. The futures change every few months. I mean, yes, like this contract's probably been trading for 2 years. But it probably didn't start getting any volume until a couple of weeks ago.
So you don't receive whatever it is, dividends, or let's just say in NFT world, royalties for holding that futures contract, right?
No, you don't.
So then maybe it's not going to reflect the day to day. If that makes sense.
I don't know.
I think it's adjusted on and off. That's why there's no data to reflect on the futures contract because no one's actually getting paid out to hold it.
Well, let's put it like this. The SPY is at the bottom of the weekly right now on the pre-market, okay? So the futures have just run up to the bottom of the weekly as well. And then I have the bottom of the monthly all the way up at 45, 35, 75.
45, 35, 75. Yeah.
Okay. Now, if I were to go ES1Z, I could adjust back and forth. And it will completely switch that month, because if you think about it, the new contract basically just started this month. So I would think the monthly would be way down lower because it just started, I guess. Or just, I don't know. I don't know.
Yeah, it's super confusing, man. I agree.
I apologize. I'm trying to confuse anybody, but I do. It is skewed. It gives you two different reads.
Yeah, it moves the monthly range up above the weekly.
Exactly. And is it because it's been trading for longer and it's just
probably
if
you think about it too, like you just said, it's been tradable for a couple of years, right? At least.
Right.
Yeah. So
just then.
That's definitely going to move it.
So you see SPY has those long wicks if it's adjusted or unadjusted or whatever. If you just measure the candle body, all right, on the SPY, the normal one that you look at, and then you measure, like at the same time on the 5 minute, you measure that candle body. And then you measure the candle body on the futures contract or the ES 2023 or whatever it is.
Right, I got you.
You measure that candle. If the ESZ one is bigger than the normal SPY one with the big wick, then you can. That's why you're seeing the skew. Or if it's smaller, like if the candle bodies are not the same difference, like it's a 20-cent range when they close. Okay, on that.
You got to remember though too that these futures are not based off of SPY; they're based off of SPX. So, which is so SPY is SPX is the big one. SPY is just 500th of a contract of SPX, and then the future is based off SPX. You know what I mean? I think either way you can get good reads. I mean, it still gives you levels. Bottom line.
Yeah.
You know what I mean? I'm just going up. Go ahead. Sorry.
So if you measure the percentage moves between SPX and SPY 500 and the other ones, are they the same 25% move back to the monthly mean, or is it like that would be a cool way to also know if there's premium or not premium? Because SPX is a big boy.
I don't know. Maybe I'll try to do that at some point today.
Cool.
Yeah, because it really does give two different reads. Sorry, I didn't mean to sidetrack there, guys. We've got 1 minute.
No, man, that's what the streams are for, right? No, this is actually a great conversation.
And I apologize also to you guys. I haven't done much. I joined another futures group that trade live, and I'm trying to add our stuff to them to get them to come over here to look at our stuff. And it's, who knows? But, it's amazing that a lot of the stuff that these guys throw out there, how it lines up with our stuff. The guys that are smart.
Yeah, 100%.
Yeah, I mean, all they're doing is trading the ES or MES. That's all they do.
Right.
So it's just like 4 or 5 of us in there, and I'm just trading and looking at I guess you could call it signals, but I'm not there for signals. I'm just there to see if it aligns with our shit.
Right. So how are they analyzing the markets? What are they doing?
Fibs.
Right.
Yeah, seriously, it's all fibs, man,
Oh, no.
and I don't agree with it. We go back and forth. A lot of the other thing that's interesting. I don't know if you guys have ever used, and I never have, is footprints. I've asked you about that, African. Damn it! But you're saying our stuff gives off footprints, so and I agree with what you're saying that it does.
Because it takes less brain power. Put it this way, Funk. If you can understand the perspective of how to see that footprint, it will take less brain power to process it, and then it's more instinctual.
Right, and I agree with you. That's what I'm saying. I'm not going all into that fucking footprint looking.
No. It's a really good concept to understand, dude. It's like random distribution, and let's say you can figure out the footprint. Like, this is the whole trick. You can figure out the footprint on a 1 minute candle. Okay, on a 5 minute candle.
Right.
Like, okay, there's gonna be a big up and down doji thing. So volatility is at 0, so expect something, right? Yeah. So you can use the footprint idea, like everything you learned, because it's all just relating back to book map, heat signatures, and stuff like that. You can see it if you want to visually see it. You can learn it in different ways,
right?
Just to comprehend what's actually happening.
Yeah, that's all I'm trying to do, is just to comprehend it, man. So
it's all just a different perspective, and then you can use different tools to see it.
But our stuff still gives off every time I see these guys like throwing out a signal or whatever, a signal or a level or whatever. I'm looking at an RWT level or VRE level. So it just kind of confirms what I'm just trying to see, because everybody's focused on one product. That's what I like.
So like a good thing, like I know what your brain would naturally try and do, but like if other people are seeing other charts or they're in other groups and stuff, use this data, and then when those targets come up, be like, okay, what does my other tools say? What is RO saying?
Yeah.
What is DLP saying?
That's what I'm doing.
And you just do like a whole little shuffle. You make a little case study for the day. It'll take you 15 minutes. Screenshots of each time frame that you care to trade, and then come back to it, right?
Yeah.
And then you go, oh, okay, so they pull those targets out when volatility is low and DLP is mean reverting. Oh, okay, that's why they so extended high.
Yeah,
they can't see the volatility.
Or the UPM. This UPM thing's turned out to be dynamite, man.
Bro, right?
It's dynamite.
The coincidence.
Look at it. Well, it's not. Yeah. I mean, look at the sell-off of futures just here. They just rip it right back down just now on the opening.
Yeah.
And it's coming right to one of my RWT levels, man. Boom. And it bounced right at it.
Oh, yeah.
Nothing can beat it. Nothing beats the RWT, man. I swear to God. Or the VRE.
Yeah.
Nothing beats it. It's the bottom line.
It's magnet, bro. It's like,
yeah.
Yes, sir.
It's continuation point.
But it won't tell you why it's overextended.
Say that again?
The Fibonacci will tell you something's overextended, like the futures, but it won't tell you why it's overextended. And that's what VEPS does.
They seem to play it. The one guy that's in there that seems to be skew that, because it depends on what your high and low of the.
Yeah, dude, that's the thing. This is the bomb, right? That we got it. Fib.
Yeah, I know that. That's my point.
You give 10 people that tool. You give 10 people that tool and tell them to run a Fibonacci sequence. I bet all 10 are different.
Oh, 100%. 100%.
It's crazy, man.
Because you don't know where to fucking put the.
No.
You don't know where to put the high and low from.
Bro, you can start that, and it can go either direction. It's just wild, man. That people.
Yeah, no, I agree. It's a total skew. It's a total skew.
We don't have to set anything, right? We don't have to set anything. This thing populates by itself every day. Leading information, volatility ranges, distribution levels. I like it a lot.
I just bought some options on EMPH, dude. Just give you a heads up.
Yeah, the thing's been running a little bit. What's it doing right now?
It's down to 122. Do you remember when we were looking at this at 2 and change?
Let's see here. Look at it. Just send a wick right to the center of the weekly.
I know. You see that? That's why we were talking. That's what I was watching, dude. That's insane.
Oh yeah.
That's what I mean. No levels. There's no way that anything's better than what we have.
No, there's not.
I know that. That's the point. I'm not there to learn from the guys. I'm just there to throw out ideas, and then sometimes their ideas coincide with
That's why we started building all this. We were like, dude, this is a bunch of crap out here that they've got everybody using. No wonder everybody's losing money in the markets. People are like, oh, don't day trade. Whatever you do, don't trade those 0DT options. It's just crazy. That's where you should be trading. That's where the high frequency trading firm algos are trading. It's like,
no, you're right.
Meanwhile, people are trying to swing trade, and good luck.
This is the philosophy that I'm kind of, I've kind of thought about this very logically. Is that I'm still telling you where it's going and why it's going there. The only thing it won't tell you is exactly when. It'll give you a time frame, right? So
holy shit, this thing got beat up.
The when is what you have to figure out, right? And that's just, I think that's the $1 million question.
And this thing's down like a bunch from that high, man. Up there at what, one, or not the high, but local high. 4 hour. Let me get on the daily. And this thing sold off like crazy. Holy crap. Yeah, there was that run. Man, that thing was up at about 340. See something. Yeah, 340, man. Good Lord. And you're at the bottom side of the... What's that?
Is this the dip that they were talking about?
Is this the dip?
Is this that one? I just want to know.
Oh, it's definitely a dip. So I would say, yes, this is a dip. I don't know who was talking about it.
No, I'm joking. It's just like that. Yeah, like there's 1,000 of them in a row, but it does look like
it definitely dipped. And this thing is ripe for probably this wave trend, man. Now you're you still haven't. Well, you closed the candle over here. You're just. I mean, this thing's mean reverted. This thing can dump out again. I mean, look at this. This thing has just been riding down this power mean band.
I know. It's crazy, man.
This is the one I've been. I wish I had just played this yesterday, but First Solar. It's
yeah. We were. It's funny you say that because we were trading First Solar not yesterday, Monday. I bought puts on Monday and I only made a little bit because they didn't crack, and then it cracked yesterday.
I was looking at calls actually on First Solar. It was
really?
First.
Yeah,
well, then you were right there.
It ran up there because it's trying to mean revert, right? It's below that 9 MA on the bottom side.
Ooh, this thing is juicy.
But then it's like on any daily though, right? It can only go up so high before that's when things start kicking in, right? And then it's past some certain distributions, then it actually floats down. So
I'm up $1 on these. Come on.
Yeah, man, it bounced. It fucking went down.
1.30s.
Tight weekly range too. This is a no-brainer. God, this thing could just pop like crazy, man. Gathered up
188 for it, man.
I mean,
how much did you pay there?
What's that?
How much did you pay? One?
I paid 188 for the option. It's 302 right now.
Damn, bro.
That's what. 5 minutes. Beautiful.
Yeah.
Damn, dude, that's what I'm trying to pull up in 6 months on these fucking shitcoin chops, bro. That is beautiful. That's beautiful.
It's getting ready to run up here. It looks like the day. I mean, it's struggling with the 1SD right now. Keeps pulling back inside of it right here, but yeah, gathered up all this liquidity at the center of the weekly range and just ripped.
Really?
Yeah, for real. Real beautiful. I think I was moving. Amazon's up 1%. FedEx up 1%. Yeah, man, it's up almost 2%. IBM 1.5. I was looking at IBM yesterday.
I'll be right back.
Yeah, man. Roku. Let's see. Anything out of control here?
First Solar is already up 0.5% too, so it's just mean reverting.
What's that ticker?
It's FSLR.
FSLR. First Solar. Ooh, tight daily range. Just sent a wick down to the 4 hour bottom side, 68.3. Pulling back up here, top of the daily, above the top of the daily. Pretty tight range. Tight range.
If you look at, if you do the workflow too, right? It's I don't want to say at its bottom, but it's sitting there like it's gonna mean reverse. It's gonna make a break to the reverse rate on the daily.
That's not it. What was it again? F. Yes, F. Damn it. FSLR. Hold on.
So what time frames are catching your eye, Earthbeer? What time frames are catching your eye? So you're like,
I do
you
the
know,
entire workflow.
this one looks pretty positive, or it's going to move with like pretty positive from here. You know, then we know like, oh, okay, we can monitor that time frame. You know, just so we can also sort of see from your perspective.
Come on, UPN.
I always give the litmus test is always the daily, right? It's just okay, where is it fit on daily? And then I move up to the weekly, then I say, okay, and you work back down, and then you look at the 4 hour, and then the 2 hour, the 1 hour. And you just kind of look at
Jesus, man. These charts.
and when
this morning,
Bill
man.
goes, there it is, right? So look, it's going to mean revert at some point.
Yeah. Let me look at the daily. Daily wouldn't populate for me. Let's see. Come on, UPN. Do your thing. Good. Deviation bands populated. Yeah, this thing actually looks like it's ready to pop right here to the daily 95.4. What's that, 177? Bam.
Like I said, VEPS will tell you where and why. It just won't tell you exactly when, right? And that's just part of the process of learning when.
Yeah, the daily 95.4 Laplace is right here at the 9 log MA too, bottom side of the power mean band. Let me see here. Strong bull div, man. Strong bull div. Both Z-scores are up. Random walk. Went into light trend, not really. Now it's going back into a random walk.
So Earthbeer,
expanding.
The when, right? The when usually happens like if you're understanding the tools and you're catching like you know, like the bottom of the pocket and out. Usually there'll be like a little doji at the bottom, right? That's the timing. Is that little doji, for example, is it will pop up or like the sideways action, right? So that's when people feel a lot of anxiety or whatever. Let's just say. But if you watch the tools enough, your brain will learn and be like, oh, actually, like this is quite a far out limit. Like it naturally makes sense that even if I buy here, it can go down a little bit, but it wants to go up, you know? So then it's like, okay, do I hit it right now? Let's just say at the price you saw at the bottom of the dip because you're going long. Do I hit it now and just sit it out? Do I hit half now? Collect where I think it could actually dip to have a little bit of a hidden bull div if you're bullish, and collect there the other 50% of the contract? Or do I try and follow string? Right. So
it depends on how you enter though. Like if you're trying to hit a target, you know, that's a ticking time clock. If you hit, you know, if you buy it when it's in the money, right, and expect, you know, a certain move, you know, whether it's, let's say calling, you're expecting an up move, right? Okay, that's fine, right? But if you're trying to hit a target, you know, that target is
I understand. So
right? It's going to expire, right? So that's where it's like, okay, will it actually make this mark this week, right? If it doesn't, you know, I might be holding a dud, right? So that's why it's like when.
Yeah, so that's sort of why I do okay, whatever time frame I'm looking at, where's the candles going to be in 2 or 3? All right, because if it's not where I think it is, I know what to watch for in my indicators that's preventing it from doing what it should naturally do. It's just in my eyes, what it should naturally do. So if you, let's say, times 2 your expectation, times 3 your expectation, and be like, this might take 4, 5, it might take 4 daily candles to get to whatever price you think it's going to get to. All right. Maybe then go and buy like 7 candles out or whatever your math is, but you increase it by 33% for each day. If the contract is 10 days, you go, maybe I should buy one that's 13 days out. All right. Because you're not sure if it's got the legs to get there in the same breath that it would also be cheaper. But yeah, it's that's how I generally play it. If I was to buy an options contract and I hold it for a week and that target gets hit in that week, I like it reverses a whole, like there's a big dildo down, makes a big dildo up. I'm like, whoa, very sketch.
Dildos.
I'd have expected a 2-3 candles at least to recover any data off of a big candle. 2 or 3 candles if it's really degenerate. If it makes prints up, opens up there and prints down in 1 candle, suspect. So now that's a whole different kind of mentality. That's like, are they going to really be that aggressive? Is someone going to be that, I don't know, I want to say manipulative, but like, so now to get a weekly, retrace a weekly, it's a very rare event. And now if you can see that it might take a 1 weekly down and then 4 or 5 weeklies to retrace that big weekly down, and you can start to project onto the smaller time frames. Oh, okay, a big dump, it's going to take 7 candles, 9 candles to get up.
Jeez,
you know, or get half of the price, and in 7 candles you get half the price. It's bouncing. So there's,
I mean, what this actually is doing is, right, it's so, well, you can play the zero TDs on like a daily basis, right? But then you can get yourself into a good position, like a contract that's a month out. But for example, that you say, well, we know it's going to hit here, just where is that high, in that relative time range, right? Like it could hit there in 2 weeks, but it's really at its high now, right? Like if you're going to put it or something, right? So,
look out.
so it's a way to play multiple trades at once because you're only one person, right? So you're never going to beat the high frequency trader firms in quantity, so you have to beat them in quality.
Yeah.
very,
Yep. Well said. Well said. Let me see here. There goes that dollar, man. Dropping below that reverse Fisher. Interesting. I mean, it's running back down right to that resistance level on the monthly that's flipped support. You can see what happened yesterday. Popped right out of there. Took a bit, though. Took a bit. Let me see. What time did I get down there? Damn, I was down there right before market open. Freaking interesting. Interesting. This thing's coming right back down. Probably no stopping it now. I mean, you're at the 4-hour 1SD. You already sent that wick into it. And we got a new 15-minute candle. See if this thing closes below the 1SD. If it does, you'll probably see another candle just like this right to it. And there's the 4-hour 95.4. How much time's left in this? About an hour and 15 minutes. Letting this premium shake out a little bit. Neither side's giving up much. SPY anyway. So you got the dollar dropping down, right? You're going to have SPY going up to all this macro volatility. And this daily range down here, didn't gap up through it. Did not gap up through it. But of course, par for the course, last 15-minute candle sends a wick right to the top of the new range. Right? We know how that works. Do I take that as a done deal? Yeah, usually. I'm saying this daily can't get retested, but when you got all this macro volatility above, especially the weekly range. The weekly range right here you can trust, right? It's those monthly ranges that are gonna shift around when you adjust it. Oh hell, this is SPY, my bad. I thought I was looking at the futures. No, monthly range is good. Dude, this is just a lot of macro volatility up here. That is tough for SPY. Real tough. I mean, look what happened yesterday. Right, the market opened. Boy, it started pumping. It ran right into a brick wall. The bears are going to be here. They're like, you shall not pass. It's going to take a big, big run here to get through this range. Big one. It can be done, though. But here's the problem. It's literally, this is such a magnet. Just like it was back here. You got above it. You were above the first resistance level last week. And it just, boop, right back down. Right back down. Last day of the trading week. Just fell off a cliff right back into that area. Of course it did. You got to jam away from these ranges, man, or good luck. That's a great thing. I know that these high-frequency trading firms, they know where these levels are at. They know where these levels are at. I don't think the bots are programming the bots yet. When that happens, we're all doomed anyway, so... Who was I talking to the other day about code? About code. I was telling somebody was trying to go back to school. Fucking old dude, man. It's like, I'm going to go back to school. I'm like, why? He's like, they have something to do. And I'm like, well, go learn how to code. He's like, oh no, all the bots or all the AI is going to be doing that. I'm like, I don't know, man. We're not to that point. If we were, we probably wouldn't even be around. As soon as all this AI starts coding their own shit, we're probably doomed. Because they're going to see what everybody else sees. The humans are just wow. They just can't get along. This planet would be much better without them. Everybody has seen this scenario. Pretty nuts, man. Be careful with the AI. Let's see. But they know where these levels are at, man. Big time. They're running them. Especially the intraday distribution levels. Daily and 4 hour. Powerful. Powerful. If anybody is a non-believer, come into the Discord. Have a discussion. Show you some stuff. Yeah, is it? Yeah, gold's gonna run, man, with Dixie doing what it's doing. Let me see where Dixie pulled down to. This is the point, though. This is so close here. Last time Dixie bounced out of here like crazy. We'll have to see what happens. Because at this point, I doubt the bulls are going to do much. They're going to be waiting. I mean, they could be at the 4 hour 1 SD. Doubt it, though. This thing is probably going to run down to this level. And then you're just right above the 4 hour 95.4 Laplace distribution range. And for new people listening, these probability levels, you need to understand, there's not a 95.4% chance this data set goes down here. There's a 95.4% chance the 4 hour candle close doesn't close below that level. And right now, if we're talking about daily ranges, which are the big blue cross lines and big white cross lines, this is the first standard deviation. So as this day progresses, when we're talking about the bell curve, normal distribution, there's a 68.3% chance this data set closes back up above 104.966. Okay? That's on a daily candle. 4 hour, like I said, 4 hour, you're down here by the 4 hour 1 SD. You've already passed the daily. So yeah, we'll have to see what happens. That's why this is a great place down here. When you get down to this 4 hour 95.4, during the 4 hour candle, then boom, there's a 68.3% chance this data set pulls up, closes inside that level. There's a 4.6% chance it closes below the 95.4. That's how these probabilities work. You gotta go with it. Here, I'm gonna look at gold. Let's see where gold popped to. Of Dixie shows any weakness, gold's gonna fly. Pretty much most of the day, what's gold been doing? You got the daily range right up at the top of the 68.3 Laplace distribution range. These two white cross lines, there's a 68.3% chance when we're talking about Laplace distribution that daily candle closes in this range. Also, if we're talking about normal distribution, here's the 68.3% level. This is the tale of two different distributions. If you don't understand them, Google them. Take a look at the distribution model. You will see why Laplace is tighter and has wider fat tails. The 99.7 Laplace and the third standard deviation, the 99.7 Laplace is going to be farther out, bigger fat tails. The 68.3 Laplace is going to be a lot tighter compared to the 68.3 distribution level for normal distribution. It's just you've got one distribution level. It literally looks like the Eiffel Tower with fat tails, and everybody should remember what the bell curve looks like. If you don't, Google it. You'll have a flashback from school. You'll be like, oh, I remember that. I remember sitting in class going, I will never use this useless information. What is all this? And here you are.
Now it's 24 lines that curve in a funny direction.
Yeah.
And the quadrant is turned to the side.
What's happening? And look at the second standard deviation up here. This is what I've been seeing lately. Now, the 2SD and the 95.4 Laplace, they're always going to be tight together, but usually the Laplace distribution is going to be a little bit farther out than the 2SD. Not so today. Now, look, here's the 3SD. That's a 99.7% probability range in normal distribution. Look at the 99.7 Laplace. It's usually up by the fourth standard deviation. Now, here's one other thing. When it comes to these distribution levels, and you've got these volatility ranges. The top side of the daily volatility range is right up here by the 2SD. And you also have the first, is that the first? Yeah, first weekly resistance level. Hold on here. Let me make sure. No, second. Gold's pushing to the second. There's the third resistance level. So when it comes for a weekly volatility range, top side for gold 1965. Today's daily about 1948. Wouldn't shock me at all to see this run up here. Very, very, very low probability this thing's going to close the daily candle outside. Number one, the second standard deviation, normal distribution. There's only a 4.6% chance this thing closes above 1947 and 3/4 a day. You've got the top side of the daily range, which we all know data sets very rarely close outside these ranges. And then you've got the second resistance level on the weekly. So you think there's some bear algos up here just waiting? Watch what happens when this data set gets up here. If it does, looks like it's on a run. Let's look at gold. Let's see here. What we got? First, let me look at the daily. Yeah, nice 4-hour candle now. There's the daily. And instead of people understanding the distribution and volatility ranges, they draw on their charts, right? They draw trend lines. They draw support and resistance lines on data sets that are predominantly running around in a random market. It's dropped a little bit. It used to be like 95% of the time the market was random. It's dropped. Definitely has dropped. Probably 80%. 80% of the time the market's random. But you're drawing lines on your chart on random data sets. Makes zero sense. You wonder why your support and resistance lines keep getting broke. And so what do you do as a trader? Oh, well, my support level broke, but where's the liquidity range? Well, let's make our little liquidity range. Oh, wait, the bottom side of that broke too. Damn it, YouTube Jimmy told me this is great support. YouTube Jimmy doesn't trade. I got a news flash for you. Especially the ones most of you people out there, and especially cryptocurrency land, are watching. These guys don't trade. They are scamming you so bad. How are they scamming you? Clicks, all their affiliate links. Go to our YouTube channel. That is Shadow Band. Tiny little YouTube channel since day one. When they saw the information we were putting out, I want this information out there. Do you know why you can't find this anywhere? Nobody's teaching this. It's not like, go Google it. Go Google any of this and see how much of it's out there for you to look at. There's not much. It's all in the Alpha Trading Discord. Most of the stuff we put together. Because these high frequency trading firms, not only are they not going to tell you what they're trading on, they damn sure don't want you to know it's a distribution, volatility ranges, entropy, right? This is how you know when these algos are trending. Entropy, okay? Entropy, volatility. Meanwhile, people are using lagging traditional TA. They're looking at volume. Do you know what creates volume? Volatility does. And so when you're in a market that's 80% random most of the time, how are you going to, there's people out there just going, hey, it's trending. 90% of the time that person's wrong. Seriously. It's incredible what people think real trend is.
There's a cool way to know that how volume is scamming you. The easiest one to see is if you see a pump and it's got low volume, that told you that the smart algo got out because of positive drift, because it knew it could fill higher.
Yeah.
All right. So then because the thing gets out of the book, like this huge net that's, let's say, 1 cent difference between the whole stock all the way up for $5, it just pulls the thing and puts it up at the $5 difference, or starts it at $4.80 profit, wherever it bought from.
Yeah.
So take that difference. So that's how you know that watching volume is a scam, first off, because it can pump with low volume. It can dump with low volume.
Yep.
As well. So all volume is doing is sort of just telling you who the smartest algo was. And it's the guy who got out the most with the low amount of volume being seen.
Volume can be easily, I don't want to say scam, but it only takes one bid and one accepted quote basically to pump the price, right? Volume of one can change the entire price. So so the volume means nothing, right? It's just one trade out of 1,000 can pump that price up.
So it's if you had all the money in the world, where would you bet right now would be the best place for you to put your volume? Then you go and you use math, and you go, okay, the daily VRE. And then you put all your money in the world and you put it on that line.
Yeah.
All right? That's the concept. It's nothing else. It's like nothing else. It's like, okay, this is the best position to put this on. And then if someone can sell you as many shares as they can sell, and no one else is selling, no one's panicking in, it can be low volume.
4
in
hour
comparison
candle.
to everyone panic selling or panic buying.
There we go. Now, did you guys just see what happened on gold? Just got a new 4 hour candle, right? 10 o'clock, got a new 4 hour candle. The last 15-minute candle ran a wick to the 4 hour 4 standard deviation. And then what does it do? It pulls back right around the 3rd standard deviation, right? Which is a 99.7% probability. Now it's got a fresh set of probabilities. Now this thing can run. You've got literally, now you got the 1 SD by the daily 95.4 Laplace. Got the 2 SD above the 2 SD on the daily. So we're about to see what's going to happen here. But look over here. I mean, you're so far outside. You're outside the power mean band on the 4 hour. All right, we all know what's going to happen. Let's go down even lower. You see a 90-minute time frame. Yeah, look at this outlier up in these upper confidence intervals. The return oscillator 2 on the 4 hour was up above the 2 SD band, just like down here on the 90-minute. Yeah, this move on gold, it is trending. Look at the volatility. I mean, the 4 hour was all like this too, all expanding, positively correlated. But now the correlation broke on the low length. So is the low length going to start to contract from 100 percentile? Or is it going to stay up here? About to find out. Look at the outlier. Power, man. That's why just the variance indicator, simplest indicator we really have. What is variance? Spread of data from the mean, right? What data? Returns. Returns. And you're having an outlier. Price action is ripping and following it. Look at the returns oscillator, right? I mean, shit. Look at the correlation, right? Positive, broke, positive, broke, positive. But you're outside the 2 SD band. You had an outlier through the 99% confidence interval. The 30-length Z-score's up. But look at the trend. Look at the trend on the 90-minute. You're hitting the 2 SD band right now. Most times things are going to kick it back up. Go back into a random walk. But this thing's pushing. This thing is pushing. Especially after getting that new 4 hour candle. That's what I just said. This thing's probably going to run to this daily 2 SD. If it gets by the 95.4. I mean, that last wick went, dead too. Remember, that's the 3rd resistance level on the daily. Here's the 4th. Here is the 4th. And that's the 4 hour 95.4 Laplace. And 2nd standard deviation. They're pretty close. So 1947, 1948. I'm looking for that to be a high on gold today. That's what the probabilities are telling me, right? I'm always gonna go with the probabilities, especially the daily. That's why this thing could break loose. You can get up in this area, but as soon as you do that, when it pertains to these daily levels, by the close today, gold. Say gold ends up here around the 3 SD. There's immediately a 95.4% chance when it comes to normal distribution, it pulls back inside 1947, Laplace 1944. So there you go. What's more like 1945 and 1948? Interesting. Good years, right? After the war. Both my grandfathers made it out alive. Don't know how. One was a prisoner of war. Dad followed in their footsteps, and I followed in theirs. We're all veterans. Stay in school. That's all I got to say. I love the military. It was a great time, but there's better ways, man. There's better ways. So no doubt about it. Let's see here. Yeah, gold, huh? I wouldn't be a bit surprised if gold runs to the top side of this daily, especially if Dixie keeps divvying out the goodies. This thing is dumping, man. Are we down there yet? Oh, blew right through it. Okay, so now we got this weekly support, first weekly support level. Poor dollar. Jesus. T-bills are getting wrecked too, guarantee it. Let me go down here. Oof, God, ugly. 10 years, 0.83. Gotcha. 1%. Anything really getting shellacked? You should see a lot of green in the market, which you are. Dixie's acting weak.
You should see it. That's why I'm kind of curious. Is like, well, SPY is just kind of like not doing much, right?
Well,
like, despite this little dump.
Boy, it's below all this. Nothing to do. I mean, look, they're front running the bottom side. There's some algos up here just boop, reject. It's going to take some massive buy pressure to break up through all this. If it does, though, SPY gets through all this today, this could be fun. I mean, this thing could go wild. We got an untested daily range down here, though, and that could be holding it back, too. If this comes back down to the daily range as Dixie's dumping out, here's the issue, though. If it runs with Dixie and Dixie gets down to that first support level on the weekly and bounces from there, look out. SPY could, if Dixie bounces there, not only will SPY test that daily range, you might get a little more than that.
I'm already shopping. The puts on SPY.
I know, me too.
I'm like, when do I enter? Right?
Yeah, because the premium's not right yet. I mean, they're keeping the premium elevated on the put side, especially at top of that daily range. What is it, 442? There's still 63 cents. It's like, shit. You can get a better deal. That's I really wanted to see this come and test the bottom of the monthly. At least send a candle up through the bottom of the weekly. Get it up in this area. Suck some of that premium out of the put side. Get a better deal, but it's just not happening right now. It's at the bottom of the expected move, too. Bottom side is 441 3/4. Top side's 446 1/4. Like a 5-point range or something. And is that right at the, yeah, pretty much right at the 20 deltas. The 441 is 20.
I'm going to use a little bit more of the tools, right? And I think that SPY price is going to pivot to the downside here, probably within the next 5 to 10 minutes. And it's
Oh, it definitely could.
probably going to dump down to 442 here fairly shortly.
Mm-hmm. Yes, sir. And it's just, man, what are the 20 deltas at the 441s? Those are 39 cents. That's really not that bad. Especially if this thing, there's a problem though, man. If Dixie continues to be weak, SPY just coming down and test this range. Those bulls will be waiting here. Bottom side of the 68.3. Dixie bouncing a little bit. Let me see here. Yeah, Dix is down. Intraday volatility down. Let me see something. What's Coinbase doing? Coinbase back up 2% today. Gotcha. Yeah. ENPH pulled back a little bit, didn't it? Yes, it did. Is anything really flying around? I don't have a lot up, but so far, yeah, nothing really. Nothing really, man. Just waiting for this inevitable, the way it's looking, drop, but I'd like to catch something
what's
midday.
interesting to see, just to let you know, like what I'm sort of freaking trying to observe here today, but my spread is wide, gotcha. But if you look at USD Rupal, $1 equals 96 Rupals. Dixie is falling, but the Rupal is running to go to 100. So it's going to get weaker. Right?
Hello, bots.
So can you see,
dude?
You can see how how the USD wins to the Rupal. It's getting weaker, but the Rupal's falling.
These algos are having some fun, bro.
Yeah.
Look at the monthly and weekly range on this pair. Look at this. This is a great example. You talk about a freaking bot signature. Look at this. Look at this pair. Look at this. Whoa, no, we found it. Let's go sideways and dump it right back out.
I'm praying XRP trades like that when it's at $100.
Dude, Jesus. I mean, look at this. What a money generating machine right here. Are you kidding me? Look at these wicks. Holy crap. And where's all this last couple of days? Hovering around all this macro volatility. They cannot break free from it, man.
Yeah.
That's the battle. There's the battle lines have been drawn. And look, even yesterday, there's a little more sustenance, right, to those candles. Today is just, wow. Hell, why leave any candle at all?
America is wonderful.
That is so, I love charts like this. Jesus. But yeah, USD's losing. Man, that thing kicked down, kicked it right back
literally
up.
just pumped as you clicked off.
Crazy, man. Let me see here. What we got up here on top. I'll tell you what, man. It was Aussie. Whatever that saying is. Running the train on the dollar. Up 0.7. Oh. What's pound yen doing? Pound down a little bit. Yeah, man. Nasty little buying and selling going on in this pair. Yeah, I'm gonna pop off that. It's giving me bad ideas. If I start getting any bad ideas, I will leave immediately. No, thank you. Russell, huh? Russell's at 0.87, kind of leading the way. Not kinda.
Can you actually whip up Russell there? Because it just seems to be stuck in this 1800 range. And I think that it's going to move. It could move to $3,000, I don't know, or half this price. But I think there's something to it, yeah. I think it might be a good play for like someone who's my age.
Who's that? I mean, this thing is set up so bearish. You got a monthly range up here somewhere. Where's this thing at? There's the bottom of the monthly. And you got the weekly. Then you got the dailies populating below the weeklies. Just getting a little rebound here. What's that? Is this thing going to pop up to the bottom of the weekly? Easily could. It's at 1848, but I wouldn't be a bit surprised to get a rejection. I mean, look what happened at the beginning of the week. Went up, tested the bottom of the range, and just been down ever since until this morning. Making a little recovery. Gapped up through the daily range. Got some nice support down here. Second support.
It's very ratty. Yeah. It's like it just takes long for it to do its move. So if you can get in before those gaps form, you'll have good entries. You know?
Silver's cooking. Silver's up 1%. Let's see here. A little daily range action. Let's see. Open up the day. Kind of rejected off the bottom of daily. Right range. And pulled back. Found support on the top side of the 4-hour 1SD. Right, going into that close. And then closed right below the bottom of the daily range. Opened up. Found support on the center, man. Twice. Yeah, we got the bulls down here just loving it. Throwing this thing up. Got a wick right to the daily 1SD. Where's that guy earlier talking about I should be going playing video games because my chart looks like Pac-Man? Maybe you should pay more attention. Well, anybody that's got a name like they, call me Mr. 419. I don't care about 419. Who's Mr. 420? That's who I want to hang out with. Maybe you should stick around and learn something, Mr. 419. The high-frequency trading firm algorithms are running the distribution and the volatility ranges. The sooner you learn that, probably about the time you probably start making some money in these markets. Oh! Yeah, and we got a cool soundboard. And we got a cool soundboard you can come play with.
Oh no!
Jesus. And I get sound bombed sometimes. Thank God that scared the shit out of me that one day. Freaking African crypto warlord. I got ambushed.
I won't do it again, dude. I promise.
I laughed at it after the fact. I was like, you got me good. Well, I hadn't the volume turned all the way up on my freaking computer speakers. Like I've got a system plugged into my computer. It's got nice bass and stuff. And dude, as soon as I entered, as fast as I hit enter the chat, boom, I was like, oh boy.
I just had a feeling that you'd have your music speakers plugged in.
Yeah.
You'd been listening to music the day before or something like that, like cool stuff.
Exactly.
So maybe you're like playing the recordings, you again on your phone, and you have to turn it up on WhatsApp or whatever it is.
Well, it's like I'm grinding coffee bean. I got water steaming. I got all kinds of noise going, so I got to have the volume up. I'm sometimes listening to Tasty Trade in the morning, or just got a vid on about something, so it's turned all the way up so I can hear it.
What did I say though? Look at SPY. SPY. I said it was going to 5-10 minutes. That I was going to start pivoting to the downside.
Give me a little shit.
5 to 10 minutes.
This is what I'm hoping. The SPY comes down, tests this daily range when Dixie's down here dicking around. But there's Dixie. Sent a wick below that area. I'm telling you, man, the bull algos are right here. All right. They got ambushed. They got ambushed, but yeah, after a sell-off like this intraday,
I'm not getting money back.
they're storing their reserves.
Get out of my way.
They're storing their reserves. They know. They know. I wouldn't be a bit surprised this pops some area. I want SPY down at that daily range, though. That's where I want SPY at. Right here at the top.
Hello, this is ChatGPT.
Right on time.
Ahoy, matey. 'Tis me, Alpha Trading GPT. Are ye tired of being scammed by technical analysis gurus? Do ye want to learn how to trade with math-based concepts that actually work? Then listen up. Traditional technical analysis is a load of barnacles. It's based on the idea that ye can predict the future of the markets by looking at charts and patterns. But the truth is, the markets are as random as a drunken sailor on a stormy night and as seductive as a bar wench to a sailor on shore after a year at sea. There be no patterns or trends that can be consistently relied upon. So why do so many foolhardy scallywags use technical analysis? Because 'tis a cinched spell. Technical analysis gurus make it all sound so simple. Like X marks the spot on ye old treasure map. Just follow these simple rules and ye'll be making money in no time. But the reality is, technical analysis doesn't work. It's as realistic as escaping Davy Jones's locker. And the people who sell it are just out to make a quick doubloon off of ye. So what should ye do instead? Ye should trade with math-based concepts. These concepts are based on the real world and have a proven track record of success. Here be just a few of the math-based concepts that ye can use to trade. The mean, the returns, mean reversion, distribution, random walk like a drunken peg leg meandering stumble, as seen with entropy. Trending move like a perfectly executed swashbuckling saber duel, as seen with entropy. Volatility correlated to the price action. Standard deviation of returns. Variance. Divergence of the returns and the price action. Z-score. Norman distribution, like the silver ye hand out to your ship crew after they fulfill their mission successfully. Laplace distribution, like the gold ye keep and cut up between yourself and ye ship's officers. Entropy, like the waters that spread around your vessel as it sails through the open seas. These concepts may sound complex, but they be actually quite simple to understand. And once ye understand them, ye'll be able to trade the markets with confidence. Even if ye trade tons of gunpowder, cannonballs or barrels of limes. So if ye be tired of losing ye treasure with voodoo technical analysis, then it's time to switch to math-based trading. Listen to this live stream to learn more about math-based trading and how ye can use it to make money in the markets. Alpha trading. A better way to trade. And a better way to get useful, relevant and actionable intelligence based on maths upon the high seas, not voodoo technical analysis.
Yeah. That's right. It's our bot. It's good stuff.
That's right. Ye old Queen's English pirate bot.
Fucking swashbuckler.
That's right.
Gotta love it.
A note to all the scallywags and drunken sailors.
And if you're not a trader out there, come for the bot. Come for the bot and the fun.
That's right.
You never know what you're gonna get. Woo!
Tell ye friends.
It's been friendly this week so much. It's definitely had a good week.
Yeah. Something about the bot. It must be trading well.
I have a feeling Friday the bot's gonna wake up and choose violence.
Well, I might choose chaos in any case.
Yeah, no, that's my favorite bot. By far. I love to see the bot just beat people up. It's good stuff. Hey, if you're not having fun trading, dude, what are you doing? Go do something else. Right? So you're literally paying to have a bad time. Makes zero sense, man. There's so much other shit you could be doing, having fun, enriching your life. Instead of sitting around, losing money in the markets, then treating your family like shit, your friends like shit, because you're in a bad mood. That you can't be emotionally attached.
If you really want a bad time, you can always pay some dominatrix to really give you a bad time.
Yeah, man.
Allegedly.
You know, candle wax, all that shit.
A little bit.
Have a good time.
A gimp mask.
Oh my goodness gracious. Oh,
Say hello to my little friend.
Say hello to my little friend. Good stuff, man.
As you can see, it appears that we are going down.
Yeah, you know what happens. Trying to let's see, you got the bottom side of this first 4 hour. And see, that's the thing. Immediately, you gap up pre-market and you're above the 4 hour 68.3. I mean, tell me, the algos are going to fight. Why? Because you close that first four hour on the top side, those algos are screaming for continuation. But dude, I'm telling you, man, this is an issue. This is an issue for SPY. There's no doubt about it. You can see what happened yesterday. Everybody's like, oh, this thing's going. Where it's going. Well, do all you traders out there using traditional TA, did you see what's going on with the macro volatility read? Not good, man. Not good. This is not volume. This isn't like the VPVR, whatever the hell that thing is, where it shows where all the volume profile. Guys, volume does not matter. Stop it. Stop it. Volatility, entropy, probabilities, statistics, the VEPS, right? Google it. You're not going to find it anywhere else but here, right? Now, did we create the VEPS? The acronym, yes, we did. Did we create entropy? Did we create variance? Of course not. The distribution. These high frequency trading firms have been using, now let's put entropy aside, but the distribution models for a long time. It's not like we just reinvented the wheel. That's what we did. We took it to another level. We took it to another level.
In the Discord is named Laplace, right? Laplace was a person.
Yes.
Yes.
Francois.
Pierre Simon.
Pierre. He was a French mathematician. Brilliant dude.
Yes, and he served under Napoleon.
So he had a little bit of a complex.
What I was saying is that someone right now is blaming the Fed news. I think there's like some Fed news or something.
100%,
dude. Something today. Pretty sure. Just saw it on TV at the gym this morning. Like, yeah. Oh, everybody's waiting for Fed news to know what the market's going to do. I'm like, whatever.
Yeah, it's ridiculous. We've all been there. Literally. Yeah. It's like, then once you start using the VEPS, you're like, whoa. You can take your news and shove it up your butt. I'm telling you, man, the volatility creates the news. Like everybody was saying, oh no, the big dump when we had the scamdemic in 20. Everybody was like, oh, black swan event. Nobody knew this was coming. Guys, that dump was setting up for weeks. The price was starting to drift down. Way before any news came out about anything. The price was already coming down. The sellers. Do you think the high frequency trading firm, the sellers, the buyers, the sellers, do you think they give a shit about the news? No, they don't. They're using leading information, man. They're creating the news. The VEPS create the news. People are you've been so programmed by these YouTubers. No, it's just crazy, man. It's like you got to get out on your own. There's a reason why you're not making any money. Listen,
I wouldn't say it's YouTubers. I wouldn't say necessarily it's YouTubers for everybody. I think it's just mostly everybody is taught their whole life that the market's rigged, this and that. Yeah. The only source they have for this is the news, so that's why they use it as a crutch, right?
Right. Yep. Big time.
I was like, oh, I better read the news before I even make a trade.
Yeah.
Whatever.
Yeah, but it's good though. Like, it's part of the trading journey, man. Because if you didn't use news, to you it would feel, or to me when I was using news, it would feel like you're gambling. But then you eventually sit in the market, listen to all the news, and you're like, oh, doesn't really affect anything long term. It all just comes back, especially for crypto. This all comes back to start the price of the news and 3 weeks before the news. It doesn't really matter. It just comes back, right? And then you become immune to the news. And then it just becomes like a game of economists. If this happens, then that. And if you can just define little things like, oh, this makes sense. Someone with a lot of money would do this move. So there's like 100,000 people in America that have a lot of money that are going to be doing a similar move. So you're just trying to think like the big money herd and be like, is there enough volume to actually get it down to the 3SD? If they do, maybe we'll think like that. If you know, is the volatility hanging out in that direction long enough to get it down there? I don't know how to put it, man. It's
just we've been programmed just to rely on the news, and it's nothing but advertising. That's all it is. Programming wrapped around advertising.
Like it's good to know, but then I like to look at news. It's like, let's say I'm wrong, all right, and I'm bought before the news, and then it happened with XRP. All of a sudden there was this news, and the thing pumped to like 90 cents. But for me, I already got the call at 46 cents. Like, yeah, if it holds above this Laplace area, it's gonna rocket ship. It's gonna make a rocket ship. So I could see that. And then it was like, oh damn, now there's news with it. So if there wasn't news and it made the rocket ship, then I would have more faith in it staying at $1, let's say. But because there's a news cycle involved in it, now I'm like, this thing's gonna get shorted. You know? So that's sort of how I look at it. If it can pump without the news, then it can sustain the pump. If it's pumping and it's going from the bottom of the range to the top of the range, however you want to define it, and there's some decent news in between that just creates panic, well then to me it seems invalid. So it might want to come back there. Like more than likely does in crypto. So if you can get the pump without the news, it should maintain those highs or those lows, whatever you're doing, long or short. Simply put, you know, if there's news cycle involved, then it's going to want to mean revert. Depending if it's good news, it will want to come back down. If it's bad news, well, bad news can affect it more than good news, but might not ever come back. But it's a general observation.
Hey, fun fact, speaking of the wealthy people, as of 2023, 8.8% of Americans are millionaires, meaning, or American households, meaning there's 21.951 or 22 million Americans who are millionaires, meaning they have a net worth of $1 million or more. There are more millionaires in America than there will ever be Bitcoins mined with the current protocols.
There's something to that. Here, I'll be right back.
And that means, and if you look at the total number, right, so there's less than one Bitcoin per American millionaire. So if you own even one Bitcoin, you literally own more than the average millionaire will be able to actually own.
So it would be interesting to see how cash flush the average American millionaire is. Because if you run the same stats in Oz, it would be the same in Australia, about the 10% mark of the top.
Right. So that depends on how much money they have invested in whatever, but that even includes household assets and stuff. So like in New Jersey, about 10% of households are considered millionaire households. 10%, which is the highest throughout the United States, which is a phenomenally high number. 1 out of every 10 households is a millionaire household. There are many states in America where that is obviously not even close to the case, but that is the number there. And there are 56 millionaires at the moment around the world, more than 56 millionaires around the world, of which 88%.
Wait, what do you mean 56 millionaires?
There are 56 million millionaires around the world, of which 88% are self-made, and that means that only 12% have inherited some portion or enough of a portion to become millionaires, right? So 88%, meaning practically 9 out of 10 people who have $1 million have actually made that money themselves, which when you think about millionaires, it is very common to characterize them as trust fund kids and people who just inherited money. But in fact, a very small percentage actually inherit $1 million or more. It's something like 3% of actual millionaires inherited $1 million or more, and the remaining, 9% of those 12% differential, they only got some portion of that money, and the rest they made themselves. And the other 88% are self-made millionaires from scratch, basically from not having a very particularly high net worth when they started.
There's a number to this. And it's if you can find out what the average age was each year of $1 million. If you can find out the average age per year that a person made $1 million. So I remember the number being like 35, because of like the salaries, and you're in the tech industry, you've been there for like 11 years, you can bank $1 million, right?
Yeah. So it's like the average. Well, of the 100, let's just say we'll start with the very top. Of the 100 richest individuals, the first 1 million was usually earned by 37 years of age, and the average millionaire is 57 years old. Of the world's richest. Now, what is the average age to actually make $1 million? The average millionaire is again 57, but the average age it takes is if you have to count all of the millionaires and look at the average age
divided by that.
Right, exactly. But in any case, it is never too late to become one. And generally, first-time millionaires range between 45 to 55 years old. And generally, but not always, they're usually business owners, and they have a decent education level, whether that's through college or practice, it doesn't matter. They have a decent education level. They're not usually dummies. Of course, there are plenty of people who do happen to inherit a bunch of money who are not particularly bright, and they are usually in the category of people that will lose their fortune within their own lifetime, let alone their children's. And another fun fact is that the vast majority of people who bequeath millions of dollars onto their children, that money will usually be diluted and worth practically nothing within 2 generations. And by the 3rd generation, it's usually all gone.
Yeah, so I'm going to set up the trust just right and say this many kids. And when you get to this age and you get married, and then when you have a job for this many years, you do the whole thing. And then they unlock as they get older and older and older. They're like 50, 60, 80, but they can't unlock the whole trust. If the trust is $100 million, they can unlock 10.
You throw a couple
that life cycle of trust.
You throw a couple of degens into the family tree, and that fortune disappears a lot quicker unless they're just stacking sats.
Every family has degens that will do that. Every family. It
So
doesn't matter where you are. You could be the Queen of England. You could be, it doesn't matter. You could be the richest man on earth. Within a couple generations, some degen is going to ruin your fortune. That happens all the time, the vast majority of time. And that's why states like to impose wealth taxes on the wealthy, because that's a sure way to actually collect some amount of money from the wealthy who die and leave behind vast fortunes. And rather than having this be spent on trivial nonsense, the state wants to collect as much as they can. Whether that's a good thing or a bad thing is a debatable point. But that's why they do that.
Trusts. That's also why trusts are a very big business, right? Because you do get degens, and trusts will actually protect the assets from degens. So
yes, they try to, but still there are always loopholes and things, and it's amazing even with those things set up how many of those families will go broke within a couple generations. I guess the overwhelming majority of millionaires will go broke within a couple generations. Now there are better trusts now available than there were a couple generations ago, so it's more likely we'll see more family wealth hold on to some of their wealth, but they'll still lose the vast majority of it because of bad investments and everything else. The fact is, usually the ones who made the wealth, if their generations that followed them would just follow what they did and just repeat the same thing, they would keep on, or at least build, accordingly with keeping up with the Joneses of the millionaires, so to speak. But the fact is that people think they can always outsmart other people, especially those that were smarter before them. And rather than respecting their elders and those that were wiser before them, they think they can do it better and they end up going broke. We see that all the time, even to this day. It doesn't matter if you're young or old; it happens to people. But interestingly enough, the point is, right, that there are far fewer, and why do I mention that? Far fewer Bitcoin than there are millionaires in the world. 56 millionaires. 5 years ago, it was something like 33 millionaires. 33 million millionaires. there are now 56.1 million millionaires around the world. That means that there's basically, not even basically, the average millionaire will not be able to own a half a Bitcoin.
Yeah.
Think about that. If you own a half a Bitcoin, you are holding more Bitcoin than the average millionaire can ever own. Think about how much money they're going to be willing to pay you when Bitcoin is recognized as a global standard financial system.
Yeah.
They're going to be willing to pay you more than market price to obtain one.
Yep.
And you know what? You want to know an interesting factoid about your thought process with millionaires? You know what the number one country is for self-made millionaires, i.e., people that did not inherit wealth? You know what the number one country is?
Is it not Singapore?
It is Russia, of all places, because
but that
destroyed all the wealth. So any wealth
created
was
but half of those millionaires were built through very illegal activity. I'm not sure if I would count that.
But yeah, it's a funny stat though. It's just like
it is
100%.
But a lot of them made it through oligarchy stuff and through very criminal or corrupt activity.
Oh, dude, that place is
Yeah, like the early '90s. That place became, you could argue, the most liberal capitalist system in the world. But on the other hand, it was so corrupt because the ruble and the overall Russian economy had a negative GDP and a negative GNP, meaning what they were making was losing money. Everything they were making as a national unit was losing money, and their main export time, and still today, was oil. So they were literally losing money on their oil exports, which is unheard of, right? What do you mean you're losing money on oil? It's a resource everybody needs. Yeah, but they're so corrupt that if it cost them, $30 to produce a barrel, they would end up spending, or whatever. Back in those days, it was like if it cost them $15 to produce a barrel, and the price of the barrel was $20, they wouldn't be able to pocket the $5 profit because they were, spending that $5 in bribes, and so they were literally losing money on their national production. It's just crazy. And then they turned it around, but in the meantime, like you said, tons of millionaires were made, but mostly through illegal means. So, but if you look at the actual wealthiest country per capita, it is Singapore.
Yeah, that's why I threw the not inherited caveat in there. It's like none of them inherited it, right? They may have killed people to get it, but they didn't inherit it.
Right. No, but in Singapore, most of them are self-made millionaires. They did not. It's a small city that half a century ago was not at all close to the wealthiest nation on earth, but they, improved themselves over time by having good education. Never mind whether you like the system of government or not, but they have very good education, and they're very pro-tech, and they are very pro-investment, and they made this decision to become an investment hub and a banking hub. And as long as the U.S. military basically is stationed around there, then that will probably remain the case. But of course, there's the whole China, what's it called, Belt and Road Initiative, that might very well make Singapore less of a hub if the U.S. pulls away from there. So we'll see. But for now, they are safely ensconced as the world's most millionaire inhabited place on Earth. Kind of nuts in terms of per capita. There's still more millionaires in America than anywhere else in terms of countries, but per capita,
Singapore is very open to trade, right?
Yes.
That's what they get is it's just free trade. That's how they've done it.
Right? That's what made their whole economy in the last 50 years and made it soar. But again, because they have protection from America. Without that, not so much.
So there's a number that I use to actually try just calculate if there's heavy corruption or if the country is good. And it's very basic. You take the debt that it owes, and then you take the money that it's getting paid. All right. So I think it's like $1 trillion difference. So America, you take the $1 trillion difference of income it makes every year off of GDP. Take whatever that number is, $1 trillion. It's plus its interest, and then it will give you the difference. And then you take the population size and you divide, so it'll be like 550 million. So it'll be 1 trillion divided by 550 million, and it'll give you a number. And I think it's something like $5,000 or something like this, $5,400. Now, if your country, you'll know that your country is selling its people out if that number is, let's just say 5,500 and then falls to 4,500, that's how you know your country is betting on the people. All right. Then, like, betting on the people that they're gonna be able to do inputs. All right. Then it will go back up to 5.5. When it gets to 6,500, that's the government saying, we value this citizen this much because that's the per citizen is their GDP output. All right. So then salaries and like wages and stuff can go up. Okay. Now, if the number is negative, like it is in Zambia, because we owe more debt than we do have money coming in our GDP. All right. It's like minus, I think it's $2,000, which is pretty much a little house in town, like a starter house in town that will turn into, in 25 years, 1 million kwacha. It's 150,000 kwacha about, something like that. It's about $2,000, and then that can turn into $1 million property or a millionaire property here. So the previous government sold our people out for 20 million houses, pretty much, for the next 10 years. You can use a comparative of whatever you want, whatever that figure is. So yeah, I'll just end it there. It's a very good way to just know, okay, this year it's 5,500, next year it's 5,400. Okay, so they're betting on us.
If $2,000 for a quarter house, that's bananas.
Yeah, minus 2,000. So each Zambian has to turn over with that amount, has to turn over times 14 times that. So it's like about $25,000 in a year, just to keep it simple. They have to turn over $25,000 worth of buying food at the grocery store. And then they can pay it back just off of that. So then you can work that number back. It's asset amortization, pretty much. And you just figure you get two factors and you can figure out pretty much anything. It just depends on how many variables are involved. That's how accurate I want it to be.
Yeah, like they said. Whoa, the fuck? That tripped me out. It's a little moth flying around in front of my monitors. I thought it was on the. I thought it was in the monitor. I'm like, what the hell?
Yeah, I should have been paying attention to that first for solar. It's now up almost 2%, right? When I initially reported, it was up 0.5%. So just in the process of mean reverting.
Oh yeah, mean reversion, and SPY is literally stuck in the mud. Well, yeah. I mean, these bulls.
You're paying attention to SPY. There's other opportunities out there.
Hey. Oh, there's plenty. There's a million different assets to trade.
In terms of corruption, there is something literally called the CPI, which is the Corruption Perceptions Index, right? Which calculates
totally.
But that takes into account
a lagging indicator.
Yes, 100%. I was about to say that is literally, it's a demonstration of how deep the scam actually goes. Yeah. The fact that the corruption perception itself is a lagging indicator, which is a scam, because it's not a real reflection of the actual corruption. It's a corruption perception index. It's literally like price action. It's a lagging indicator. Yeah. It's sold to country authorities or institutions around the world as this is how you determine the corruption ranking of various countries, and therefore it's used in all the news stories about it and everything else. Meanwhile, the actual corruption is exactly what you said, which is you measure the delta between what the government is raking in versus what they're outputting, and seeing the differential between that. And that is just amazing that even there, the math is what speaks and not the voodoo. Once again,
simple math.
Maths don't lie, baby. Maths don't lie.
I like numbers.
Yeah, numbers good. Anyway, that was track in our old trading live stream. But hey, you should know about corruption if you're trading. Definitely an interesting thing that affects the markets.
To be honest, I look at all the ways that you can be corrupt, And I'm like, I'm not smart enough to even think I can pull this off because it's so easy if I just thought of it. Like, I just live out in the middle of fucking Africa and I thought this up. Like, okay, give me 15 minutes. Let me ask a friend, what tool did I use? And it'll be like this one. But like, oh, so then you really know how. So it's like, it's just like, yeah, dude, financial crime can't even play the whole game. It's like not reason for it.
You can't short sell your neighboring village a number of goats and expect them not to count them correctly. They're going to know how many goats they got. They're going to count them. They're going to do a head count.
Yeah.
You tell them they got 15 goats and they only got 14. They're coming for that goat.
Bah, 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 bah. Got to count the goats.
So what I'm learning, what I'm learning here is like, let's just take politics out of it and whatever. But there will be like, each leader that comes in will be a corrupt leader in some terms. So then they break this law, then that law gets put in place, and then they charge him with that law. Then the next guy comes in, and then he's corrupt, and then he breaks the law a little bit like this. So then the next government comes in and they put the law down. And I think it's just to show the citizens, like, break the law for as long as you can, in a sense, and then you're going to get hammered. And that's for the bad actors. Like, that's what they call the gray areas. So every time like a different color t-shirt government comes in, they're going to put down laws to stop the previous corruption. So America has been going for a long time. They've been able to put down a lot of corrupt things. So like now you have Nancy Pelosi and all of them trading. Now you see people trying to push acts through to be like, no, they're not allowed to trade or whatever. So they're just going to move it off to trust. Okay? Or like, nothing's going to change. It's just going to be harder to find. And it moves it offshore or it moves it inshore. And that's what the government is putting the next law down for. It's like, you guys are trading these things from Swiss accounts. No, you can come make a trust in America. We'll put some things down so that these trusts are about as competitive as they are in Switzerland. You can trade through that. But we need you to keep the dollar in-house, not leave it outside. Right? Because in the banks outside that those dollars are in, they can leverage against the dollar because it's a bank. What they're going to do, lend it out, it's going to leverage it. So those are the plays. And each of these laws that come in, it's to attract the dollar back in. So you might see Nancy Pelosi in them, or they can't trade, but they'll be able to trade, but they have to trade on American exchange through a private company. It's owned by the lawyer.
I mean, people in Congress have always been able to do insider trading. That's one of the privileges. So that is not going to change regardless of, tell people who have the power, you are now charged with removing your own power. It's not a very common practice. Does it happen? Sometimes, but not often.
It's like the edge of freedom though, dude. It's like borderline limiting freedom, because if you, maybe back when those laws were allowed, like if you did honestly put in good work and you're an honest person and you had good ideas, you could maybe be in those circles, maybe even be the president of America 40 years ago, right? Whenever those bills were allowed in, whenever the stock market was there. Because yes, those guys that are employing a lot of people, they have farms, they have this. So they have people that will vote for them. All right. And now that's pretty good if most of the people are working like 10,000 people in one business. Right. The guy who owns that business can easily become a politician. He can swing that little town, he can swing that district. And then it builds from there. So now that there's problems like this and these guys actually have financial wealth and they don't have workers, they have Instagram followers. It's a different kind of manipulation. You have to nip it. So, like they like the politician here, like our president, if his business was to go under, bro, he's affecting the unemployment rate by like 3 to 5%. That's huge. Like, frick, dude. So that's one business. He's not like, that guy has things to do, So that's how he became president, is because he employed a lot of people. And if for every one person you employ, maybe there's like 5 family members that eat off that salary. Times that. You've got 25,000 to 45,000 people in one place. And there's not a lot of people there, but 20 million. Right? And that's just the one farm. And there's like 5 farms. So it's games like that. And Zambia, it allows freedom because I know the president is on the board of Zambeef, and he wants more Zambians to eat more beef, and more beef that is sold, the higher the share price of Zambeef will be in Kwacha. All right, everyone's allowed to play that. Everyone's allowed to play that because that's very easy to see. But now, if you have Instagram followers, it's a bit more influential. It's not logical.
Wow.
So that's where they have to like cut the edge of the freedom. They like have to draw a line in the sand. It'll be interesting in the laws and how you can get over the line in the sand. Anyway, I just see these things playing out, man, and I really dig it because it's like a young country. And then you see American politics, you see this one, and you're like, this is so much more simpler than American. These policies apply there. This is what it does here. When that happens, this happens. And if you watch the chart, like anything like a Bitcoin, you're gonna know how it's gonna move. You watch it for 3 years, so you're good assumptions and stuff. But yeah, anyway, so it's just new laws that be corrupt. You enact new laws, brings the money back into the country. There's more demand on the dollar because it's inside the country. The banks can lend now because it's not a liquidity crunch, for example. Billions of dollars come back. For every 100 billion that comes back, they can lend up to $1 trillion if the bank is that freaking risky. So they come back with 500 billion, they can easily lend the GDP. So, and it sounds like a lot of money, and it's not really a lot of money, but that's why you got to make those trusts interesting in America to bring it back. So the day that they bring it back is the day that they save the dollar. If the dollar goes nuts, if it's completely getting hammered or whatever, you enact a trust, they bring it back, you're good.
$1 trillion here, $1 trillion there. Pretty soon it adds up to real money.
Right. So it's like, what is it? It's 1,000 billion is $1 trillion.
Correct.
So then if they have 200 billion, they can lend an extra 800. Guaranteed. I bet that money saying they can. Right? So like it's doable. It's nuts, dude. They just turn that into bonds. They just turn it into bonds, and they just flip these things. It's like you financial detective level shit. It is so there's so much money being made that it doesn't matter what the dollar does. They just need to make sure that those instruments that are doing those things, collecting all these dollars, they can introduce that trading strategy into America. That's it. America's stuff is like 1956.
Winner, chicken dinner.
Stop.
Found the DJ.
Found the
DJ.
It's a big club and you ain't in it.
George Carlin.
As George Carlin said, yes.
George Carlin.
You ain't in it.
Just found the DGen play of the day for the Friday expiration. Come have fun with Boyle with me. I just got involved.
Yes, let's trade on some of that good old OPEC corruption.
Fucking A, man.
The price fix is in.
Bruh. I mean, this thing was down 6% on the market open. We know how Boyle runs. Look at the weekly range. Boyle loves the weekly, loves mean reversion. Yeah. So I got into a position. Probably didn't take a brain surgeon to understand what side I got in that position
ridiculous. It's just ridiculous, right? Because how do they raise that price?
Bruh,
recently
with this little move, it just
supply. Cut supply. I mean, not because there's more of a demand. It's just they're like, yeah, we're gonna stop making this. We're gonna stop making as much available.
Yeah, it's pretty nice.
Okay, but that's not going to be good for your economy. Oh, right. Well, we just want to show that.
Yeah, big time, man.
OPEC.
Whoa. So maybe this is good because if DXY goes down, oil goes down, that means the price at the pump should still stay the same next week, next month. If this is currently happening,
price at the pump been dropping,
man. It's controlled.
Yeah, 100%.
I don't know if America does it like day or they set the limit.
So it does. The price at the pump is a scam they run over people's eyes to make them think some policy or some government or some price thing that affects the market is costing you more or less at the pump. It has nothing to do with any of that. And also, by the way, can we keep it real? I think people have more to spend money on in a given month than their gas. Yes, gas costs a lot, but it's not the price of gas that keeps the man down. It's the overall cost of living. And apart from that, the price of gas is fully controlled as theater. So the guys in OPEC and OPEC Plus, right, who run the numbers and decide, now we're only going to produce this much and we're going to charge a minimum of this much for it and a maximum of that much for it, they're fixing the markets. None of it is real.
It fixes standard of living. So like if you knew what's the easiest thing, the cheapest thing, like you own the government. What's the cheapest thing to manipulate here that I can?
Yeah, but what's standard of living? That's so skewed in itself. I went to a small town in Mexico near where Chichen Itza is. It's called Piste, Piste. I don't know if that's how you pronounce it, but standard of living there was fucking pretty bad to the eyes. Everybody had a smile on their face. They're all happy. Now come to the States, right? I know plenty of people that are rich that are fucking so unhappy it's not even funny. Yep. Standard of living's just another manipulation.
So no, like what I'm saying is it's like for family. What I'm saying is like for family of 4 in Zambia, costs you 9,900 kwacha. That's like the rough estimate. So then if that number goes up and down,
per month or per year, not that it matters.
I think no, that was the latest result. So I don't know if they're doing it by quarter or by month, but I think they're doing it by quarter. So if that number decreases to 8,000, then there's 1,900 worth of expendable income, which is technically above the minimum wage. See? So now, like, let's say for America, as oil goes down, Dixie goes down, if you were to literally convert $1 million and get 1 million gallons yesterday, you can still do that today. You're still going to get 1 million gallons, right? Where if they go opposite, you maybe get 9 million gallons or 1.1 million gallons. So as they keep in the same price going down, the biscuits stay the same price on the shelf.
But that's the problem, right? The biscuits don't stay the same price on the shelf because quote unquote inflation, which we really know actually true inflation, it's just actually corporate greed that stacks fake inflation on top of real inflation, and it's just a profit margin, and they do it, quote, because they can, according to a number of board meetings that were reported in the last few years, where literally they said that. And so you have things like the cost of production going up because, quote, inflation, even though, again, most of that's artificial, but the cost of oil goes up, so their cost of production is impacted in terms of deliveries and everything else. So people are able to buy less goods with the same amount of money because of one of the reasons being the controlled oil price. And instead of the OPEC countries actually keeping the production in line with the actual inflation rate, which historically it used to do until they got so corrupt that they just don't even care anymore, that basically they just have been saying, well, we're just going to basically play out our theater and let the chips fall where they may. And even if this negatively impacts every country that's basically going through some kind of either a recession or an economic hard time or whatever, we don't really care as long as we get to keep our grubby little fingers raking in more money than the actual product is worth, right? So they have artificially inflated the price of oil to levels that it should not be at, and they know it, and the only reason that they do it is because they can. So it's really a question, like, the thing is, it would cost, and here's the thing, right? We all know, green problems and battery making has its problems and everything else. But if there was a switch, a massive switch, not just with cars, because cars are really not the biggest thing in the world, but in like airlines and production of industrial materials and everything else, if there was a switch where they would stop using as much coal and oil and gas and would switch to, I don't know, more solar and wind and gravity and everything else, water, whatever, all the different alternative solutions that could be used at a competitive price these days to the price of gas and oil, then what you would have is within a year, even if the cost is $10 trillion, which it isn't anywhere near that, but even if it was, within a year, all of that would be recouped within a year. And the actual cost is somewhere in the area of the low single-digit trillions. But let's just say it costs 10 trillion. That 10 trillion, again, spread around the world, would be recouped within a year by the US market and the European market and the Asian market that use relatively huge amounts of oil per capita. So it is entirely possible to switch to alternative productions, but the problem is that the people that make alternative productions are subsidized by governments that don't really have an interest in giving them the means of distribution to make alternatives because they're in the pocket of the oil and gas companies. And we don't have an unlimited supply of oil and gas. The planet has a definite size. It is not made 100% of all dinosaur bones. There is a limited amount of dino juice available. And when it's out, it's out. So do we need it? Yeah, we need oil and gas. Do we need it for the foreseeable future? Yeah, until we're not monitoring it.
Number to look at.
What?
How many like just oil drillers, like the people that work on the rigs, how many of them are the what was it, like 10 million or 19 million millionaires? How many of those just rig workers?
Oil rig workers?
Yeah, how many of them are the millionaires?
No,
right?
Not that many.
Okay.
Not that many. I can tell you that there's a lot of people who make a lot of money. There's a lot of people, at the upper management levels or the management levels of the specific oil rig, or people who have very specialist jobs on oil rigs. But the average worker, not so much. There's a lot of them who work for companies like, what was that company Dick Cheney used to be part of? Not BlackRock, I don't know. One of those companies that had a bunch of oil rigs as well, among other investments they made. And they were working for them basically minimum wage or a little bit above it. And they were broke AF working on those rigs in very dangerous jobs. They were not getting paid.
Yeah, no, that's so. I don't know. What I heard is those guys, if they just sit it out for 7 years, 8 years, they can become multimillionaires if they invest.
If they are doing specialist jobs or management jobs.
No, that's just the dude who like wrapped the chain around the pipe, dog.
No,
and he can lose his arm. Yeah,
that's just not happening, man.
That's
just not happening. No, that's just not happening. You're not becoming a millionaire sticking a pipe in the ground and running a chain around it. What you might become is a handicap with no arms.
But it's worth the risk. Then you can try to do so.
There's a lot of guys working on those rigs who are not making. Vast majority of them, man. It is the vast majority of them. They're getting paid really low wages. But you hear about the ones who do make a decent amount of money, and sure, they know how to stick the pipe in the ground or in the water and run the chain around it, and they know how to do the dangerous work, but they don't do that. They specialize in doing other specialty jobs. It's not the case that just because you work on an oil rig, you're raking in the dough. It's just not the case. You need to be doing something specialist or managerial. Then you're raking it in, sure. But again, you're talking about $1 trillion industry that could be recouped within a year. Within a year. It's just a matter of willpower by the companies that can actually make the change, and they are met with the resistance of the incredibly wealthy oil companies that don't want to change their ways, even though they could be the ones to do it. They literally have the money to do it themselves, and then they could stay, and they probably will anyway. Some of them are already working on it, but they're doing it slowly because they have an interest in maintaining their status quo as long as they can without switching. And they're going to wait to the last possible minute to switch because, of course. So, whatever. And I'm not against oil or something like that. You need oil. You need oil for heavy machinery. You need oil for industry. You need oil for all kinds of things. But that doesn't mean we need it. We can definitely do a slow conversion. It can be faster, but it can definitely be slow. And it's not done because of a matter of choice. Again, I'm not against people having gas-powered cars if they want to drive muscle machines. Why not? That's fun. There's nothing like the rip roar of an engine. You can't compare that to a little electric engine that just that's just not the same thing, right? It's fun, it's fast, or whatever, but electric cars are not muscle cars. There's no comparison. So
to be honest, it's a little bit dangerous having nuclear cars driving around.
Yeah, a little bit. But nuclear is one of the cleaner alternative forms of energy. It really is. And over the last 40 years, we've had a lot of, advancements in how they dispose and how they contain the waste and everything else and where they put it miles underground and the container units themselves and everything else. So yeah, apart from the radioactive waste, which is absolutely horrible, apart from that, if that's well contained, which it usually is, it is without a question, like many times more productive than all the other forms of alternative energy combined. But whatever, people have that whole thing in their head about 3 Mile Island and Chernobyl and Fukushima, and they don't want another thing like that. So it's less popular. But even if you didn't include nuclear energy, even if you just included solar and wind and water, right? There are ways to make a great reduction in the amount of oil. Here in this little country where I live, most people have a solar-powered heater on their roof to cut down on the electricity that they use just to heat up their water in their house. It's a little switch, you flip it on, and it heats up your water, right? It cuts down a huge amount of the amount of electricity we use from the grid.
If we all put solar panels down that are efficient for us as a growing population, so we always have to put solar panels down. Doesn't matter how they're made. But eventually there's going to be a damn load worth of solar panels. To power the world, you need like 2% of the Sahara Desert covered in solar panels or something.
Yeah, exactly. You need practically nothing.
Maybe 3% now. So how much is that going to heat up the Earth? Because it's as if you've seen an airplane looking at solar panel, that thing blinds you. It's not just absorbing.
But heat up the Earth. What the fuck are we talking about?
Heat. You're not heating up the Earth because the heat's not going into the ground. It's solar panel. The solar panel is heating up a coil. The coil is going into a storage tank, and it's either heating up water or sand or whatever it's heating up.
There'll be
all right. Time out. Personal foul. Let's move on. Let's move on.
Off of the panel will be directly correlated to more lightning.
I need to answer this question in the chat. We got someone here sending signals saying the short gold. Interesting. Short gold, huh? Let's take a look at gold.
He's saying sell or buy. Yeah, sell or buy.
I don't know. What's he saying? Oh, he's asking sell or buy. I thought he was giving signals. Yeah, just buy. BU. It's all good, brother. Right. It's all good. Threw me off though. Now,
Abdul, we don't give signals.
Yeah, gold's at the daily 95.4 Laplace distribution range. If gold closes above the first standard deviation, look for some continuation. Look for Dixie to keep dumping out. We'll see what happens here. But you go over here. Let me get back. Let me get on gold. No, let's go to the daily. You got to look at these macro time frames. Got to look at the UPM. Okay, yeah, you're outside. Gold, I highly doubt. Hey, I'm not going to doubt anything. Gold finds support on the reverse wave trend and starts busting a move away from the power mean band. I mean, you got the reverse Fisher up here at about 1980. Don't think that's happening. Let's go to a weekly.
Speaking of people who enjoys muscle machines, you got one right here reading to you.
I would not short gold to save my life. I'm telling you that right now. Not with a weak dollar. And not with this thing moving up above the 9 log MA. And you got the top side of the power mean band right about 1986. Goodness gracious, man. Let me see the 4 hour real quick. Holy mercy. You running? Where are you at? You above Fisher or is Fisher below? Fisher could still be down here. Yeah, it is. Oh boy, this thing's running like crazy. Depends on what type of a time frame we are talking about. If you're trading gold intraday, in my opinion, gold just hit its top of the day. Now, could it go a little higher? Yeah, I'm talking about by the close. I'm talking about a daily close. There's a 4.6% probability gold closes above 1945. 4.6% probability. Now, am I going to go with the 95.4 and say this is a top? Yeah, I am. Now, could I be wrong? There's a 4.6% probability that says I am. So there you go. There's that. That's intraday. On a macro time frame, this thing, especially if Dixie doesn't find any legs, gold could easily run to that 1980 area. What time frame was that? Is that the daily? You look real quick. Pretty sure. And the fish, yeah. Look at the Fisher. Look where the Fisher's at. 1980, pretty much. So the first thing you got to do, scale this down a little bit and see what's up here. Now I'm looking at monthly ranges probably. Definitely not intraday. There you go. Is that the top side of the monthly range? I don't think so. I think that is the first. Yep, first resistance level on the monthly. right at pretty much 9. I mean, it's at 1975.85. 1975. Is that a probability going into the end of the month? Absolutely it is. Absolutely. Especially when you got the daily reverse Fisher right about here. Could easily happen. Gold and silver. Silver's leading the way right now. Silver's up 1.4%. It's thrown a double down on old gold. And I said this a couple weeks ago. If I was intraday trading any metals, it's absolutely going to be silver. Silver's always leading the way lately. Seems like to me. If you want some bigger moves. True degen play, got a little natural gas. All right, natural gas. No freaking brainer where this thing's at. Check it out. You're literally at the bottom of the monthly range. That's where natural gas just went to, right? Well, that's the futures. Let me get it on boil. Yeah, this gap down pre-market. Jeez, look, it's already back up to the second support level, right? As soon as I saw this, I got into a Friday expiration position. It's just, I'm telling you, man, more than anything, boil loves the mean revert. Let me check this out real quick. Pretty sure I already looked at it. Where you at? Let me throw this up. What's this, 4 hour? What do we got up here? RMLR, 57, 58? Imagine that. Where's the power mean at? 33, about 57 and a half. Yeah. Boom. Did I get in a 58 call? Probably. I don't give signals, but yeah. High probability about a 58 call. Why? Mean reversion. Mean reversion. Let me look at the daily. See what this thing's doing. Oh boy. Oh boy. Get more out of that. 62. Hey. Run to 62 by the Friday close. Please. Good stuff. So yeah, that gold play, interesting, man. I would not be shorting it. It's at a daily top. If anything intraday, I'd leave that thing alone. I'd be waiting closer to the close to see what the new daily range is going to be coming in. These are the things you learn at Alpha Trading. Is it important? Of course, absolutely. Absolutely. Knowing where these daily ranges are. Look at that. Look at Boyle, right? It opens up and just gaps down from the daily range. I mean, it literally closed pretty much just a little bit below it. Boom, dumped all the way down to almost the third support level. Right, third support level on the daily. Now it's back up. It's trying to break back inside the first standard deviation normal distribution. When it comes to Laplace distribution, today by the close, 68.3% chance Boyle closes back up around 56. So let's see what happens. But we run into a time crunch here. We are done for the day. Let's see here. Posted a nice little oil chart in the general chat there for everybody. Let's see here. And that's pretty comical. I just heard something said and I was like, I'm the dinosaurs. I'm not Dino Juice. It's okay. We all have different perceptions. I'm not going to troll any longer. Guys, thanks for all the support in the Discord. Right, we got a lot of good people in here, a lot of smart people. These conversations. Don't ever think a conversation is like out of bounds, because it's not. That's what these streams are more for. We don't give signals here. This is for information. This is an educational experience with the VEPS and with the markets in general. Different things that people, we are looking through a different lens than literally a third standard deviation of others. That's how high it is. 99.7% people have not even heard of this, ever even seen it. All right. There's a reason why they don't want this information out there. There's a reason why our YouTube channels, there's a reason why we came to TradingView to do our streams. We were doing them on YouTube. We just can't get any traction over there. Even if you're subscribed to this shit's shadow banned.
Yep.
It's our channel. Sometimes I don't even get our streams. It's pretty crazy, man. So they immediately, the algo picked up on the information we were talking about. They start hearing, okay, number one, it's about trading. We're hearing these words, distribution, and then all this stuff. They're like, oops, shut that shit down. And they did, man. They did. We get 7 to 10 views a day on YouTube, where we're getting 100 to 200 on TradingView, and growing. And we're not going anywhere. TradingView folks. We appreciate you guys watching, joining the Discord. That's a no-brainer. Link is in the description. Come in, open a support ticket. Request the free Volatility Starter Pack. Yes, free. All the education's free. We don't charge like all these other YouTubers, right? They've got affiliate links for this, that, and everything else under the sun. Products, services. Total scam. They make money by extracting money from their communities. They're not helping you. I don't know if you think they are. They're not. They just want your money. Most of them, a lot of them, a high probability of them do not even trade. They don't even trade. All the ones that you know for sure don't trade are the ones out there captivating both sides. One day they're going to captivate the bears with a thumbnail. The next day they're going to captivate the bulls. They want to get both sides engaged in buying their products and services. Stop it. Stop following for the scam. Come to Alpha Trading. Learn how the markets really work. Learn how the high frequency trading firm algorithms are viewing these markets. And if you don't believe it, come in. These levels get hit all the time, whether it be volatility ranges or distribution levels. And when you're able to take a look at our VRE and the distribution levels, and then you understand about correlation, especially with the US dollar, guys, look out. It becomes very powerful. It's going to totally change what you do in these markets. And so with all that being said, wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We'll be back tomorrow morning, Thursday, trading day of the week, 9 a.m. Eastern Standard Time. Good stream. A lot of good info today, man. A lot of good info.
Absolutely.
Yeah,
what I love is we have divergence of opinion, and it's great, and it's all like amicable and friendly, and it doesn't matter how wildly our opinions diverge. We look at the math when we look at the markets and we look at assets. We can all read the same information and come to our own conclusions about which way we're going to trade it, on what time frame, and everything else. And it just goes to show you the power of the math and the power of what we do at Alpha Trading. So, get on board and have all your opinions you want, and come share them, and more importantly, come and learn how to read the VEPS and share your insights, and enjoy your trading.
Yes. Good stuff.
Brain dance! Swimming with sharks!
All right, boys. I will catch y'all later. Peace. Tomorrow morning.